welcome to the March Taxation and Economic Development Policy Committee meeting for Ellevate Louisiana. Today, we'll be talking to Richard Nelson, who's Secretary of the Louisiana Department of Revenue. Prior to his appointment to the Department of Revenue Secretary by Governor Landry in 2024, Richard served as a member of the Louisiana House of Representatives for the 89th District. He has a degree in biological engineering from LSU and is a graduate of LSU's Law Center as well. He was in the U.S. Foreign Service as a security engineering officer and diplomat for 7 years, overseeing American embassies around the world. During his tenure in the House, he focused on improving the state's tax competitiveness and elementary school literacy. In his cabinet level position at the Department of Revenue, Richard is responsible for overseeing the state's funding and budget and has spearheaded efforts and succeeded to reform Louisiana's tax code. I would just like to introduce Richard, and we're excited to have you on. There's certainly a lot going on right now with our tax environment, and we have an important constitutional amendment coming up, which, you know, there are differing opinions all through the community. So I want to kind of talk about it, talk about maybe for a second what happened in the special session that we had in November. Not too much, because I'm going to give everybody the link for this resource that I'm going to share right now, but I will go ahead and share the revenue information bulletin that has been published on this. So you can see the different things that happened in the fiscal session. And I'll let Richard, if you could, just go through. This has about 9 pages, so maybe like a minute a page, and just kind of tell people about all the changes that were made.
Yeah, I can just probably run through it pretty quickly. I mean, I think one of the biggest changes was the individual income tax. We had 3 brackets. We cut them down to one single bracket where everybody pays 3%. The top bracket previously was 4.25%. We also raised the standard deduction from $4,500 to $12,500, and so that's the amount before you start paying income tax. I'm trying to see what the other pieces are that are on the page. Standard deduction. You can just keep going. On the corporate side, we reduced the corporate rate. The top rate was 7.5%, and there were 3 brackets. We compressed those to one single bracket at 5.5%. We got rid of the corporate franchise tax. So that will be gone starting next year. We did a lot of changes to different credits, bunch of the corporate credit incentive programs. We sunset a lot of those. We kind of closed some of those down. We reduced the caps on some in order to pay for those reductions. On the sales tax side, we got rid of about 92 sales tax exemptions. And at the end of the day, in order to pay for some of the changes, the legislature did decide to increase the state sales tax rate from 4.45 up to 5% flat. And we did tax a few additional services, but expanded the base a little bit. Mainly like digital products now are taxed, cable, satellite TV, and then some information services. That was the main base expansion. There was a lot of talk about some other things, about some other services, but those were not passed by the legislature. Then we have the constitutional amendment that's coming up. I don't know, Julie, you want me to go into that now, or you want to kind of focus on that later?
Hold on for a second, because I have some questions about this, because I was just having a conversation with one of our staff about the overall tax reform that was done. And, you know, people have been kind of talking about whether it's regressive or if it's progressive or if it's relatively neutral. And I just kind of wanted to check in to see if you had any idea, you know, where we were. From what I understood going into the session with the Reset Louisiana coalition, we had subcontracted with the prior legislative fiscal officer, Greg Albrecht, to take a look at whether the proposed changes to get down to this 3% flat tax were actually progressive or regressive or neutral. And he said that it was ever so slightly more progressive than it was before. And I just wanted to see if, I'm not sure if there were any variances from this, you know, to what he had prognosticated on. Just check in and see what you think.
Yeah, so I mean, I think the major difference between kind of our initial proposal and what ended up passing was a shift from taxing those additional services to
Mhm.
just raising the overall rate. And so the overall rate went up by, whatever, 0.55%, which is about, $5. Basically, for every $1,000 you spend, you're going to spend an extra $5.50 in sales tax now. I would say that's a little bit more regressive than if you were to tax like car washes and dog grooming. Typically poor people don't subscribe to car washes and, get their dog groomed. So I think that was a little bit more regressive. At the same time, I think it's really marginal. And then I think the changes on the income tax side were pretty marginal too, as far as there's a reduction in the rate, but there was a pretty substantial standard deduction increase, right? So that standard deduction increase that almost tripled is a significantly more progressive change. So I think it's honestly, I'd say it's probably overall neutral. Like there probably wasn't any significant change. I know in the y'all's analysis, it was slightly more progressive. I think some of that would have been from that services being taxed instead of the other.
That was just the income tax. So no eye toward what was going to be done in sales tax was taken. It was just the income tax change that was deemed to be slightly more progressive. But then when the sales tax rate was increased from 4.45 to 5, a lot of people are saying that that's more regressive. And I don't know. I know that I do believe, and we would really love to get Greg Albrecht to do another analysis just to kind of show, but the time is too short now. I think that all of this is really coming up. But my gut, for what that's worth, is that it's fairly neutral, just like you kind of think
Yeah, and I mean, I think we
going.
did we did get rid of a lot of credits and exempt, credit the, special basically special interest credits and stuff that I think spending money on those things is, I mean, obviously if you give corporations or significantly rich people a tax break, that's not going to be progressive at all. And so a lot of those things went away in order to collapse those rates. So I think that that's another one of those offsetting factors that makes it slightly more progressive. Overall, I would say all the changes are probably about a net neutral, though. I don't think it makes that big a difference.
Yeah. Okay, so we know going into this that we don't necessarily have completely full information on that, but it doesn't seem overly regressive in from what I know of doing tax in Louisiana. Then, when people are talking about this constitutional amendment, and we've already had a podcast. Well, I don't know if we did it as a podcast actually, but we had a committee meeting on the constitutional amendment. And for the most part, all the business groups are coming out in favor of the constitutional amendment, and Invest in Louisiana and the Power Coalition are coming out against it. I think it won yesterday. Yesterday, the judge decided that the constitutional amendment could go forward as written, correct?
I think she kind of punted it, so it went to the appeals court. I think she ruled on the summary. She didn't rule on the summary motion, or she started to, and I think there was a stay on the ruling until the appeals court has the ability to weigh in on it. And so, I, it sounds like the court's going to let it get the court overall will let the election go forward. I think there's a pretty high barrier to actually, stopping an election while it's underway. I mean, we've already had people absentee vote. Early voting starts on Saturday. So I'm not really worried about that. But I think that at the end of the day, the election will go forward. I think they have an opportunity probably to challenge it after that if they want to.
Yeah. Okay. All right. Yeah, I misread that then. So, what would be the effect on what was done in the fall in the November special session if the constitutional amendment failed? Like, let's just say if it did fail, how would that change what was done in tax?
Yeah, so I mean, there's not really. I mean, all the things most of the stuff we've talked about, most of the things people have heard about have already happened, right? That's already the law. The sales tax changes, the income tax changes, the corporate changes, those have all happened, and those are all the law now. I think that the biggest tax changes that are included in that constitutional amendment are lowering the constitutional cap on the income tax from 4.75 down to 3.75. So If that doesn't happen, the legislature could come back and say, hey, we want to charge a 4.5% or 4.25% income tax like we used to have. They could come back and do that. If the amendment passes, they can't go higher than 3.75. There's a pretty substantive change in the vote threshold for basically special interest tax breaks, incentive exemptions, credits that requires a 2/3 vote of both houses. So that will not go into place if the amendment fails. The There's another piece about keeping the sales tax bases. I know you care about that a lot. Keeping the sales tax bases aligned between the state and the locals going forward. That isn't going to be in the Constitution if the amendment passes. It won't. Obviously, it fails. And then finally, the inventory tax opt-out. So currently, Louisiana is one of the few states that taxes business inventory, and you can't have an exemption. There's no exemption for it. The locals can't opt out of it or anything. And the amendment will put in place an ability for the local governments to opt out. That will not happen if the amendment fails. So those are mostly the substantive tax changes. There's a bunch of revenue impacts as well that I think are probably negative. The teachers won't get a pay raise. There's also a doubling of the standard deduction for seniors is in the amendment. That won't happen. So, if you're over 65, instead of having a $25,000 standard deduction, you'll have the normal 25 or the normal 12 and a half. But other than that, there's mostly revenue impacts that I think are also, I'd say, negative. But hopefully the amendment passes. Everybody go vote yes on Amendment 2.
Yeah. Yeah. So, I mean, I think that the thing to remember from it is that really the tax changes are all already enacted. And this wouldn't change the current tax system other than the doubling of the standard deduction and or the retirement exemption for senior citizens. Is the retirement exemption in the
No,
Constitution?
so the retirement exemption has already been doubled from 6,000 to 12,000. So that's already the law too. Really, it's the only personal impact for people would be that doubling of the standard deduction if you're over 65.
Okay. All right. And then, I actually, I mean, when I look at these things, I don't really love it when we constrain the legislature. I mean, having a 3.75 max income tax, I don't particularly love that. I don't know that it's something that we want a mountain that we necessarily need to die on, because our income tax rates and brackets have been in the Constitution since the Stelly Amendment passed, right?
Yeah. So, I mean, it was, like I said, that maximum income tax rate was already in the Constitution. The only difference is now we're lowering that from 4.75 where it was down to 3.75. So that rate is lower than what we were paying last year, right? So when you're filing your returns, you're paying 4.25%. And so the maximum rate we're going to set in the Constitution is lower than what we paid last year, but it is higher than what you're actually paying right now at 3%.
And then, I would think that the vote threshold at 2/3 vote, I don't always love that, because sometimes it's hard to get, 2/3 votes. But certainly, even at Ellevate, like to take a policy position, we have a 2/3 vote because it stops something that isn't a widely held belief from happening.
Yeah, and the policy thought behind that is that, Louisiana, we've kind of been addicted to special interests, giving out special interest tax breaks. I mean, that's just how it is. Instead of lowering the rate for everybody, we had these really high rates, and then we carved everybody out of it. And I mean, the problem is that works great if you're here and you have your lobbyist, and, the lobbyist can come get you your carve out, but it's really terrible for, attracting business and attracting people to the state. And so we wanted to get away from that. And I think in the special session, we got rid of a lot of those exemptions, rid of a lot of credits, but we don't want to, slip back into that mentality. And that piece of the amendment helps prevent that.
And how does this change the freedom of local government? Does it change the freedom of local government to enact tax changes?
So, I mean, at the end of the day, if you were a local government and you wanted to change, like, for example, you wanted to stop taxing, I don't know, crawfish traps or something like that, right? Well, the way for you to do that would be to go to the legislature and bring a bill to have that sales tax base changed. Now, you're going to you can't do it on a local basis. You'll have to do it for the state and the local side, which makes it harder because, I mean, you probably know from being in the legislature, a lot of times we enact state only or local only exemptions. And that's really what makes our sales tax code so complicated, and was a problem that we had for forever. And so now, if that amendment passes, we're not going to be able to play those games where, like, okay, only Plaquemine Parish can exempt something, right? So the state and every parish will have to do it as well. So I think it's better policy. I mean, very few states would allow that kind of thing.
Yeah.
And we cleaned up a lot of those. Like I said, 92 different sales tax exemptions. A lot of those were those kind of optional local ones or where the state and the locals didn't tax the same thing. And it just makes things incredibly complicated for business. And we wanted to get away from that.
Yeah, I mean, personally, when I sat in Ways and Means, after I figured out like how bad of a thing it was to make the basis uniform every time somebody brought an exemption at the state level only, I found myself to be very frustrated and
Yeah.
just hard to get anybody to listen to me about it. So now they'll be forced to listen to me, you, the people. It'll be
Better
great.
policy. They'll be forced to
It
listen to better
is.
policy.
It is. So now what about the inventory tax? We're allowing the parishes to opt out. How many parishes are going to end up opt out of that I mean, according to your estimations, and how many will still be charging?
Yeah, that's a good question. I mean, I think over time, I think most parishes will probably move to opt out. We did offer an incentive of about basically three years of tax collections up front, of the inventory tax collections up front to make that opt out, up to $15 million. That would equate to about 40 parishes being able to get that the full 3 years, right? And so if you're using that measure, it's about 40 parishes. I think a lot of those won't. Some other ones will because there's a lot of considerations in it, which is why we made it a local option, right? We did expand the sales tax base for the locals, so depending on where who gets a sales tax levy and a millage, that helps offset some of the lost revenue. If you're on the border with Texas, and Texas does have an inventory tax, it's not as bad as ours. But that's a competitive advantage for you. If you're on the border with Texas and you can say we don't have an inventory tax and Texas does, that's a strong reason not to do it or to opt out of the inventory tax as well. So same thing if you're on the border with Mississippi. Mississippi also has a inventory tax for things that are left in Mississippi. So I would say that there's a lot of different considerations for individual parishes, how much money you actually collect in the inventory tax. And so we would hope that a majority of parishes would over the next couple of years, but I think we'll have to wait and see. I think there's a lot of uncertainty over what the practical effects of it is. Like, what does it mean? I know some parishes are itching to do. They would do it today if they could, but we'll see how it goes.
It sounded like from what you said that we were looking at, potentially up to 40 of them opting out, but you'd still have 24 or so that have significant base in inventory tax, and the 15 million wouldn't be anywhere near enough to offset it. Is
Yeah, I
that
mean that's
ballpark?
really the math is that they make more than they make more than basically 5 million a year in inventory tax, so it'd be harder for them to opt out. But
Yeah.
it
And
depends
that
too,
would,
because some of the parishes they might make more than 15 million, but it might be a very small percentage of their overall property tax base. In which case they could maybe they could absorb it anyway. Like say Tammany, for example, doesn't collect significant inventory tax, but it's still more than I think that 15 million.
yeah, because in some parishes, it's big industrial inventories. And then in other parishes, it's more like big malls and lots of car dealers and stuff like
Yeah,
that. Is that right?
Walmart. Yeah, it's Walmart and retailers and
Right.
car dealers. So
Right. And so there's a little bit of argument over the teacher pay issue. And is this constitutional amendment actually providing for a raise in teacher pay? Can you explain why this is being milled about in the community?
yeah, I mean I don't know about. I mean, at least in some of the objections I've seen, it's like maybe that people just can't read because it is mandatory in the Constitution. Like it's not a raise. I think maybe sometimes there's confusion about the difference between a one-time payment that the legislature has been providing. But I would point out there's a very strong difference between me giving you $100 once and me giving you $100 every year for the rest of your life. So this does mandate a salary increase, not a one-time payment. And so the minimum amount of that payment is that $2,000 stipend that the legislature was giving, right? That same $2,000 amount. But so I think the argument is like, well, if we gave you a $2,000 stipend last year and now you're going to give me a $2,000 raise, it's essentially equivalent. But that is the minimum amount of the raise is the $2,000, right? So overall, there's going to be about a $40 million excess savings from paying off the UAL debt. That's basically the mechanism. We make a $2 billion payment to the teachers on teachers retirement debt. That saves about 300 million a year. About 200 million of that is to K through 12 education. That's where the teachers are. And so there will be about a $40 million or so extra amount in savings that those K through 12 systems will have that they can use to give extra raises. So the minimum amount is that $2,000. So um, I think some of it is just misinformation, some of it's just misunderstanding. But at the end of the day, I know all the teachers are going to get a permanent pay raise of that $2,000.
Yeah. Okay. So one of the things left in all of it that people are definitely talking about, trying to understand, are what's going to happen with revenue stabilization and budget stabilization fund. How much currently is in each of those funds, and how are they going to be blended together?
Sure. So I think the budget stabilization fund has about, which is the rainy day fund, like our main savings account. You can only use it in times of an emergency or budget shortfall. I think it's about 1.3 billion, 1.2 billion currently. The revenue stabilization fund, which is kind of our secondary one that was created a few years ago, that has about 2.8 billion or so in it. And so the change is basically you basically combine the two funds, right? You're going to get rid of the revenue stabilization fund from the Constitution, put it in statute with its current most of its current balance. You're going to basically increase the maximum rate or the maximum amount you can put in that budget stabilization fund, the regular rainy day savings account. You're going to almost triple that balance. About $3 billion will be transferred from the revenue stabilization fund, or about 2 billion. So you transfer it to the budget stabilization fund. So then you'll have about $3 billion in that budget stabilization fund, the rainy day fund. And then the revenue stabilization fund comes out, it goes to statute. And then that's the source of that $800 million balance or so. That is the amount that we're going to use to pay that incentive for the inventory tax opt out. And then also to kind of smooth over the payment of some of these credits from the corporate side if the collections dip, because we did lower the rate and we did reduce a lot of the credits or cut out the credits, but it's going to take some time for that to kind of flow through the system. And so we wanted kind of a buffer to kind of, cushion that corporate income tax collections over time as those kind of credits phase out.
Okay. All right. How about, okay, so kind of switching gears. I wanted to ask about what can we expect to see in the upcoming session? Because I know that there's some more changes that you guys are going to propose.
Yeah, so I mean, I think some of it's going to depend on the constitutional amendment, right? So if the constitutional amendment doesn't pass, we're not going to have very much budget flexibility to really do any additional cuts or any additional, some of the changes we'll have to wait and see how they all pan out because, the constitutional amendment gives us a lot more budget flexibility. Um,
How? Tell us about that a little bit. What does
yeah,
that
so
mean?
because the revenue stabilization fund currently gets all of the corporate collections above $600 million and a significant portion of the mineral revenue. And so once the amendment passes, most of that will then go to the general fund, giving you more flexibility. And so you also have the budget stabilization fund will be maxed out. And so when the budget stabilization fund is max full, you don't make any more contributions to it because it's going to have $3 billion in it or so. And that will free up some additional money as well. So there will be some, I think a lot of flexibility if that passes. If it doesn't pass, you're going to have also the teachers. I mean, the teachers, I don't know if they just, it's not my call, I'm not the spending department, but, the teachers will not get a one-time stipend most likely if they, if it's not in the budget currently as it stands. So if the amendment doesn't pass, there's going to be a question of, well, hey, do we try and fund another one-time stipend or we'll do something with that? But you're going to have a lot less flexibility. And so that's going to constrain what you can do on a tax front.
Yeah, and from what I'm understanding, in all the other podcasts and committee meetings that we've done, is like from the DOT side, it looks like they're trying to find a good bit more capital to invest in the ports, and also trying to move the salaries that are being paid out of the Transportation Trust Fund right now in DOTD, move those salaries into the state general fund, which that creates a need for an additional 300-400 million as well. So there's a good number of things that I guess we must be hoping that budget flexibility will provide funding opportunities for, and early childhood education too. I mean, that's a very high priority for
Yeah.
Ellevate.
So,
A lot of
so I
groups.
mean, like I said, I like to point out I'm the revenue department, not the spending department. So I don't, I'm not, I'm just trying to make sure that we got the money.
Yeah.
But I think there are a lot of competing priorities that I think that's part of the reason why we want that flexibility to begin with is that maybe this year you want to fund early childhood or transportation, whatever it is. I think in the long term, you're definitely going to need, you need some additional transportation funding. We don't have it. We've underinvested in transportation for the last, you know, 50 years or so. We haven't, the gas tax, the main source of it was set in like 1984, hasn't changed since then. So at the end of the day, we're going to have to find some source of revenue for that. And as of right now, there's not a lot of options.
Yeah, I have a lot of experience with us not liking the gas tax. So, so
Yeah.
taking the salaries that are being paid out of TTF and moving them to the state general fund is a great answer for that problem, and something that I was also always a big proponent of. That just is a good idea. I don't think it was done until the Jindal administration that those salaries were put in there. I'm not positive about that, but that was always my understanding.
Yeah, I mean,
Before,
the issue is that then you have to find out $500 million in general fund. So, I mean, like, if you have $500 million in general fund, it's the same. I mean, it's essentially the same problem. I think moving it out gives the legislature, I think, some more control over it than it is when it's dedicated, but
that
you still
too.
have to have the money. I mean, math is very unforgiving.
It really is. It's just math. So there's a couple of quick questions, and then we can go to a little bit more about those bills for the the tax session that's coming up. What is well, this is a spending question. So if you want to defer it to spending, you
I,
certainly can just
it's
say,
okay. I have thoughts on spending. I'm just not in charge of it.
right. So the first one is a spending question, and you can say, wait and talk to Taylor Barra and Patrick Goldsmith. But what is the plan? Do we know what the plan is to replace the early childhood funding that would be impacted by Amendment 2 passing?
Yeah, I think it's about $10 million. So I think that I think the plan is to just replace that, not actually have a cut from that. And
Yeah,
I
I
mean,
thought
just
it was more than that. Okay.
yeah, I think it's about 10 million of early, maybe 12 million of early childhood funding that comes from those constitutional education funds. But
Hmm.
I mean, to put the savings in perspective, right? You're going to save $300 million a year, and between higher ed and those at their educational spending, it's about 50 million that you lose. So you lose $50 million a year, but you save 300 million. So I mean, the math is pretty solid. Like, this makes sense to do
Yeah.
it, and you're going to have to rely on the legislature to appropriate some of that money to fill those
Yeah.
purposes. But the legislature is putting that money in that anyway. So I think I imagine the will still be there.
Okay, so here's a question that would be more certainly in your lane. One of our members, Jessica Storr, she saw that Caddo Parish and Jefferson Davis school boards have filed bills to authorize them to levy an additional sales tax above the rate allowed by current law. What's driving this, and do you anticipate more parishes and school boards filing similar bills?
So that's normal. I mean, like, the Constitution actually has a 3% cap on local rates, but almost every local government has charges more than 3%. And so they have to get authorization from the legislature in order to levy that additional amount. So basically, anytime you're going to raise the sales tax above that 3%, if it's, you haven't been authorized by the legislature, you have to ask. Um, the funny thing is that normally we just rubber stamp those in the legislature and we say, go to your voters and ask for it. I don't know if the legislature is going to change now and say, hey, look, like, stop raising the sales tax on everybody, figure out how to live within your means, or get it somewhere else. I don't know. But that is wise because the Constitution requires that. It's
Right.
I think Article 6 is where they have that cap. So it's not Article 7.
Right. Which is the one that's being largely rewritten by this constitutional amendment.
That's right.
Um, there was another question about, and this is one of the great mysteries of to me too, but it's I'd like to know more about the full expense deductibility for certain investments and projects. It's number 6 in the Revenue Information Bulletin. I jumped. Bonus depreciation deduction and bonus amortization deduction. Will there be detailed RIB for this specific change regarding what projects and investments are eligible, and if there are any requirements on timing, like certain projects that are placed in service 2025 and forward?
Yeah, so I think the statute, I'm not an expert on this, but I think the statute references the IRS, one of the IRS codes, the Internal Revenue Code, that lists the projects that are eligible. Because really we were trying to piggyback off of the IRS at the The 2017, Trump Tax Cuts and Jobs Act, they had enacted this full expensing, and it's in the process of phasing out now. I mean, one of the things President Trump said in his, I don't know, State of the Union or Address the Nation, whatever it was, he said that he wanted to bring that back and actually make it retroactive to the first. And so I don't know that that's going to happen. I know there's a lot of federal budget negotiations going on, so depending on where that lands, that can change the calculus some. But Louisiana is going to have it regardless. But basically, we use those projects that are under those. I think it's basically big capital investments, but it's in both the personal income tax code and then in the corporate code as well. So I think research and development is also included in that. So there's a lot of those kind of corporate spending that otherwise you would have to expense over time. You can now take it all up front. And so I think it's a very important provision. And I think as it goes forward, we'll probably issue some more guidance on it and once questions come up about it. But it is a very competitive change that hopefully the federal government will enact it as well, because it's probably the best tax policy that you can do as far as just benefiting everybody without really picking winners and losers.
Yeah. So on the topic of gas tax, another member was asking about that she believes that because the price of gas is generally less than $3 a gallon, which is kind of what we were all used to, that this would be a good time to put a gas tax on. And I kind of thought at one point that you guys might try that. Is that anything you guys are going to try for the special session? I mean, regular session?
So we're not going to try that. No, we're not going to try it this year. I mean, I'll say at the end of the day, we have to find some way to fund infrastructure. The last time the gas tax was really raised, I mean, was 1984 or so, which was before I was born. So I don't know. People ask me all the time, well, why is our infrastructure so bad? And you're like, well, you're paying the 1984 price for it right now. So at the end of the day, what else are you paying the 1984 price for? Not too
Nothing.
much. So
Nothing.
we're gonna have to figure out some way to fund it. I think the idea is to do these structural changes at DOTD first, and then come back and figure out how to close that funding gap after.
Yeah, and certainly if we can take the salaries out of the TTF is more or less supposed to fund those roads and bridges projects. But when the salaries and wages of DOTD were moved into the TTF and covered there, it created less, it cannibalized some of the funds in there. So there was less to put toward roads and bridges. So that if we can fund the state general fund to move those salaries and wages out, then it could free up $300 to $400 million for roads and bridges, which would be the equivalent of some increase in a gas tax. So I guess it will remain to be seen if they can pull that off. All right, now I have one more, and then we're going to cap and go to the special. Why do I keep calling it a special session? It's a fiscal session.
At any rate, like being special.
Yeah, because all we have are special sessions. So many specials. We have the highest sales tax in the country. People are worried that that already impacts the poor, and that a flat income tax of 3.75 would impact the wealthiest and give tax decreases to the wealthiest, cuts to the to corporations, and also to the wealthy. That we're at the bottom of every good government list in the country. I don't see, or I want to understand how these changes will allow us to address these issues. And we kind of talked about that a little bit, but just what do you have to say just kind of about that in general?
Yeah. So, I mean, I think how much money you raise is, how much money you want to spend and how much money you need to raise is one question. And I think how you raise it is another. And so we tried to focus on how do you have the most competitive tax system? How do you do it? Louisiana has historically relied on, we just have really high rates, and then we carve a lot of things out. And I mean, I think that exists in the personal income tax code, a corporate income tax code, and even sales tax. And so we just have these really high rates, and then we carve a lot of stuff out. I think that still exists in our sales tax. So, we really have really expansive, the Stelly exemptions that were added in for, electricity and groceries are those are some of the most expansive in the country as far as what they cover. And so as a result of that, you have a higher rate, but you're paying a higher rate on fewer things. And that's part of the reason why it's there. So like Mississippi taxes groceries, Texas and Florida both tax power. So, I mean, I think at the end of the day, you do have to look at the whole picture. It's not just what the rate is; it's what are you actually applying that rate to. And then on the corporate side, we gave out hundreds and hundreds of millions of dollars of corporate tax breaks. We sunset and got rid of a lot of those and used that money to reduce the corporate rate. So I think it's essentially almost a neutral. I mean, the idea was to make it mostly neutral as far as the reduction would go. The taxes would go down. We got rid of the corporate franchise tax, but we also sunset or capped a lot of those credits and incentives. And so that's just better. I think that's better policy for everybody. The state's not picking winners and losers. And I think we have, at the same time, you got to point out Louisiana has very, very low property taxes. I mean, we can argue whether that's the best policy or not, but we do. So, I mean, we have, the sales tax is high, but we're like 48th in the country in property tax. So, I mean, people get a break on that. Every state that you go to, they get it somewhere. I think the idea is that you want it, low, simple, and fair. And I think that that's where we tried to go, is having a tax system in every aspect that is low, simple, and fair.
Well, and I'll also mention that, on the business side, some of the, business did not get everything they wanted because they're still paying that 2% sales tax on business utilities. And for C corporations, I don't know how many C corporations that are paying inventory tax and getting the credit once that is disallowed for C corporations. How many of them will be able to morph into LLCs or some other form of business and avoid that, reduction or elimination of their credit? But that seems like that would be another one that would offset that regressivity argument a bit, huh?
Yes, I mean, I don't know what the total number is, probably $500 million in corporate credits that we got rid of. So, I mean, at the end of the day, that's going to have I would say that's a more progressive change. I mean, we did lower their rate. That's where most of the offset came from. So it wasn't just, we're going to stick it to the companies. I think you can see from all the projects that the state has announced. I mean, just since we've done this tax reform, you've seen significant progress in the state as far as economic development. A lot of that is driven by these changes, and I think we'll continue to see that going forward.
Yeah. Okay. So let's talk about what bills you have for the 2025 regular session.
Sure. So, I mean, so like I said, a lot of that's going to depend on the constitutional amendment. We have some cleanup that we have to do on, especially on some of the sales tax exemptions. Some of the sales tax exemptions that we got rid of. There's one for public high school athletic events that public was left out of the definition and only private and parochial was there. So that was one. There was admissions to nonprofit events that I think that got cut out inadvertently. So there's a few of those things that we have to address. I would say just kind of in the cleanup area. We're going to look probably at adding some additional services. We try to tax a couple services. We're looking at more of a limited list of services, to add to the sales tax. And if that's possible, we can probably lower the rate a little bit more, depending on how the collections come out, the constitutional amendment passing.
Lower which
the
rate?
personal income tax rate. So we can lower the personal income tax rate a little bit more if we are able to do that.
Would there not be any consideration to lowering the sales tax rate with that? Because or it would definitely be applied to the personal income tax rate.
Yeah, I mean, I think it's kind of open. I mean, the truth is our state sales tax rate is still relatively low. I mean, even at 5%, the state sales tax rate in Texas is 6.5. In Mississippi, it's 7%. So I mean, our state sales tax rate is still relatively low. It's really the local portion of the tax that is high. And so if you ask me, I think that would be it would be better to encourage locals to reduce their sales tax rate versus us having an abnormally low state sales tax rate, right? Especially in the long term, if we want to get rid of the personal income tax, which, the governor has said over and over again, he wants to get rid of the personal income tax. I know a lot of the legislature has too. Well, lowering the state sales tax rate does not move you in the direction of getting rid of the personal income tax. So that's a consideration there. But at the end of the day, having a broader base of the tax, no matter what, is always a better policy. And so we'll see how that one goes. I think there's some work in the severance tax. I mean, the severance tax on oil is 12.5%. It's like the highest in the Western Hemisphere. So we'd like to reduce that and probably look at some of the other credits, the horizontal well exemption, trying to, maybe clap that one down a little bit in order to pay for some of the reduction in the oil rate. So there's a couple other things that we're looking at. We're not sure, but like I said, a lot of it's going to depend on that constitutional amendment and kind of what we're able to do going forward.
All right. Richard, thank you so much for sharing this information with us today. Really, I mean, we really appreciate it. For all of you listening, thanks so much for sharing your time with us today. If you're interested in these types of policy talks, check us out on Ellevate Louisiana's website, where you can learn more about our events, our policy committees, advocacy efforts, and how to join. Our website is ellevatela.org. That's ELLEVATELA.org. If you enjoyed this episode, don't forget to subscribe, leave a review, and share it with someone. And remember, big changes start with informed conversations. Keep the dialogue going, and we'll see you next time.